Real estate investors know very well the concept of the time value of money, or the idea that a dollar received today is worth more than that same dollar received a year from now. However, what's talked about much less in commercial real estate finance is the financial value of time, which also operates in a very similar way. Decisions you make early on in your career make a massive impact on how your career ends up. And just like someone who starts investing $2,000 per month at age 25 becomes significantly wealthier than the person who starts investing $2,000 per month at age 30, the earlier you begin to make the right decisions from a work perspective, the more those decisions are going to have time to compound and pay off down the road. And since these early career decisions are so important, in this video, I wanted to share 3 pieces of commercial real estate career advice that I wish I had been given earlier on in my own career that I think are applicable to anyone starting out in commercial real estate right now, whether you have long-term goals of becoming the chief investment officer at a top private equity firm, or you're just looking to jump straight into real estate entrepreneurship. Your early 20s are a time when everything is new and fresh and exciting, and at this stage of your career, it can feel a lot like you have an unlimited amount of career options to choose from. And while having options is a great thing and a very fortunate position to be in, the very beginning of your career is also the time when you'll have the least amount of context through which to make career decisions, which can end up leading to some pretty big detours along the way in getting where you want to end up. So, to help you avoid some of the biggest pitfalls I've learned from my own personal experience, the experience of my peers, and from Academy members looking to transition out of a job that just wasn't where they wanted to be, in this video, we'll walk through 3 pieces of career advice I wish I'd gotten in my early 20s that could have significantly sped up my progress towards my goals, and a few things that you can think about in your own career to get you from where you are to where you want to be in the real estate industry in the most direct and efficient way possible. So the first piece of advice on this list, which is especially important early on in your career, is to do whatever you can to work for the best in your field. You can think of this as trying to work your way into a position that makes you the dumbest guy in the room, but what this really involves is finding the most successful people you can work for in a part of the business you want to build your career in, ideally at a company with extremely high expectations of both its employees and its partners. In commercial real estate here in the US, the best players in the business are almost always based out of major gateway markets, specifically New York City, Boston, Chicago, San Francisco, LA, and DC. In most cases, if you look for the top rainmakers or heads of the major CRE investment and brokerage firms, you'll see that most of these people operate out of one of these locations, which also means that this is going to be where a significant portion of the firm's business is going to flow through. If you want to become an expert at what you do really quickly, there really isn't a much more efficient way than putting yourself in a position where you're around the level of success you're trying to work towards every single day. Hold yourself to the standard of the most successful people at the company and do what you can to operate at their pace. Try to watch how they interact with clients, try to understand the kinds of questions they ask on property tours, and learn how they make investment decisions or present opportunities to potential capital partners. In major gateway markets like New York City and San Francisco, the deals also tend to be bigger, which means bigger commission checks, higher fees, and higher salaries as a result. The big name private equity firms also tend to have a presence in many of these markets, and a Blackstone or Brookfield caliber firm on your resume early on in your career can serve you in many different ways for many years to come. And if you don't want to stay in a big city long term, the best part about this is you're not tied to that city forever. It's relatively easy to make a move from a major market to a smaller market, and you'll often even come in at a higher level when transitioning to a smaller shop in a smaller city because of that institutional experience you'll be able to bring to the table. Ultimately, starting in a major metro helps you build your skills quickly, increases your value in the industry, and pushes you to become a better real estate professional in any part of the business you choose. Now, second on this list, aside from getting to a major market quickly, the second piece of advice I would give to someone just starting out in the real estate industry is to decide on a specific product type you want to focus on as early as you possibly can. Commercial real estate isn't rocket science, but it does take experience to be successful. And the investors, brokers, and real estate professionals that win in the long term are the ones that know a specific part of the business really well and are really good at executing in that space. This is why I recommend that if you start out in a product type you aren't interested in or don't see opportunity in, you'll want to take steps to get into the product type you do want to focus on as quickly as you can. Becoming a good real estate investor or real estate professional is all about reps. The more deals you underwrite, the more deals you manage, and the more transactions you work through, the more you'll learn about what you can and can't expect out of a certain deal, and your investment making decisions will grow stronger as a result. If you spend the first 5 years of your career in acquisitions roles within a retail-focused investment firm, by the end of that 5 years, you'll probably know very well how to underwrite retail properties, you'll have relationships with the major brokerage firms in the space, and you'll have a pretty good grasp on what makes a retail deal successful. However, if all of a sudden you make a switch to multifamily, your knowledge of retail leases won't transfer in most cases. You'll have to start fresh with your brokerage relationships, and when you're trying to underwrite a multifamily renovation, you're probably not going to know what the return on cost will be of adding things like in-unit washers and dryers or renovating a fitness center. It takes time to learn the expense norms in a market, the major capital items to look out for on a specific type of property, and to build relationships with people deeply entrenched in the space. So if you want to avoid a career reset later on to move into a different part of the business, my advice is to do whatever you can to either start out in that part of the industry or make the switch into that sector as early as you can. And finally, the last piece of advice I wish I was given earlier on in my career is that if it looks too good to be true, it probably is. If you're being presented a commercial real estate deal with a 12% cash on cash return from day one in today's market, it's likely that that deal is either in a market seeing negative net migration patterns over the last several years, leverage levels and default risk on the property are extremely high, a short-term interest-only period is propping up returns, or more than likely a mixture of all three of these things. And if you're presented a deal with an advertised IRR of 25%, it's also likely that either you're taking on a significant amount of risk, the sponsor's assumptions are extremely aggressive, the projected hold period is short, and the actual profit on the deal is insignificant, or again, more than likely, a mixture of all three. The same thing is true for career opportunities and expectations of those career opportunities that are presented to you. If you land an offer with a salary of 150% of what other firms will pay you for comparable work, be prepared to work at least 150% harder than you would at other shops. If you're being offered a job title that you're well underqualified for, you might be joining a company that's flying by the seat of their pants and luring you into a blind leading the blind type situation where you'll have to figure everything out on your own without much or any direction at all. And if a company promises you a piece of the promoted interest or deal fees, but those fees don't vest for another 5 years or more, they may be banking on your departure before having to pay those out, and you may be selling yourself short in your negotiations as a result. Especially when you don't have a ton of context to work around what's normal and what's not, you'll want to do your due diligence on this by talking with other industry professionals and mentors in the space. Unfortunately, there is no such thing as a free lunch in commercial real estate, and you should make early career and investment decisions with that framework in mind. Overall, if I could go back 10 years and give my past self 3 pieces of advice, starting in a major market, picking a product type to focus on as soon as possible, and looking at opportunities through the lens of if it sounds too good to be true, it probably is, would have helped me significantly in accelerating my learning curve in the business, and I hope these are helpful for you if you're trying to decide where you want to start out in the business or where you want to go next in the commercial real estate industry. And if you are trying to break into the industry and want some more specific, tailored advice customized to your own unique situation, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions and detailed walkthroughs of the solutions to those questions. And you'll also have access to private one-on-one email-based career coaching to get feedback on your own unique career scenario and the specific next steps that might be best for you. And if you like this video and want to see more career-related content on this channel, make sure to hit the like button to let me know. And if you are currently working in the real estate industry, let me know in the comments below one piece of career advice you wish you had been given based on everything you know today. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.